Devang Mehta joining us this morning. Lots of stocks and sectors to continue to focus on as well. Devang, first, just in terms of the overall trend of the market, while we have seen a little bit of profit booking, as you may call it, over the last couple of sessions, clearly everyone's trying to look for buy opportunities here. So first, let's focus on the positives and, what would be some of the pockets you'd be looking at right now. We were focusing, for example, on some of those retail names that have just been going from strength to strength. And we've been seeing that trend in the last few weeks as well when it comes to trade. What's your sense on some of those names as well, like a Trent, a DMart, for example?
Good morning, Abha. Thanks for having me on the show. Yes, I think clearly the mood remains buoyant as such in the capital markets as well. And why we know the reasons, because global markets generally have been showing good bit of a green color tick in the past few days. In fact, also with crude coming down, it benefits a lot of sectors which had crude as its as a headwind for its input cost, and now becomes a tailwind. Plus, I think also the budget presenting FIIs with a good bit of a red carpet for India also augurs very well for the large cap as well as the large and mid type of stocks. Coming to the sectors, of course, which right now are trending high and which are beneficiaries, and as you rightly said, something like retail, something like FMCG, consumption, all this have got a good boost after whatever was laid down in the budget. And I think a little bit of a buoyancy from the consumption side, from the rural side, as well as agri getting some bit of boost, as well as infrastructure also being the focus of the budget. I think post that the sentiment has improved quite a bit. In fact, numbers of a lot of companies were still, I can say that had some bit of stress, and management commentaries were not also bullish. But market is taking a forward-looking stance at this point, and that's why the reason for organized retail to do well. Also, small ticket consumption seems to be coming back, and that's the reason why, as you rightly said, companies like DMart, Nestle, all this having monopolistic or oligopolistic type of advantages, and very less listed peers to compare would command that sort of premium. So yes, we remain buyers in this type of names and at all dips.
P multiple of 85 times and at a P multiple of about 100 times. That's DMart and Trent for you. How will you make money? For a business which is a retail business. DMart is a 5%
I think
business.
that's always been the case. It's exactly as you rightly said. People will always try to analyze it in that way. That's the 5% margin business, but it's a cash cow, right? So you will have your cash in the evening. You will have your cash flows ready with you. You take high discounts from your suppliers and pass it on to the consumers, and you have your own shops as well. So of course, I'm in no way arguing that it is not overvalued. Yes, it is overvalued, but India has been that type of a market since long, where expensive becomes more expensive if it defines that type of quality. So again, as I said, yes, there is always a risk attend to it if the growth suffers. But these are right now businesses which will command valuation till when capex actually comes to the picture, and a lot of value stocks which right now are value traps. If they emerge, then probably this side of the market will subside. But till then, I think PE would be more of participants' enthusiasm rather than price to earning ratio.
See, suffering. They generate a lot of cash flow. They have a cigarette business which cannot be challenged. The stock is at a 52-week low.
Which one, Nikunj?
ITC. I mean, they are a zero debt company. They have a 20,000 crore FMCG business. They have a cigarette business.
ITC.
And I've been told that if I take the cash away from HUL, ITC today is generating cash which is more than the entire FMCG sector put together minus HUL.
Fully agree. I think yes, ITC has always tried to, in fact, talk about commanding an FMCG type of valuation. But of course, we know that the de-risking of the cigarette business, which it has always tried to, and having the biscuit business or the hotel business, which they have tried to increase their sort of market share into, and also their revenues from, has never been a very, very successful endeavor. So I think market was always waiting that ITC de-emerges its cigarette business, which is right now always subject to a sin tax, and everybody budget has the capability to upset ITC more than any other candidates. So if at all the valuation of the business which is right now ex-cigarette business, if that is sort of listed, then probably the valuation which ITC always wanted would come in. Otherwise, it would always trade at a half a valuation of what HUL trades at. If I'm not wrong, HUL would trade roughly around somewhere around 58-60 times, and ITC would not be more than 23-24 times. With good dividend yield also, I think it's not made money in the last 5 years. ITC last 1 year, 3 year, 5 year returns has always been negative in the past 5-7 years, if I'm not wrong.
Let's just pick up on autos as well as the ancillaries, because they were the ones which saw some fresh shorting yesterday. So M&M would slate about 7.5%. There was Eicher Motors, which was down about 3%. There was Tata Motors, which fell about 3%. And then there were the likes of Motherson Sumi, Bharat Forge, all these stocks which cracked pretty hard. CK, what's happening with autos? And is there opportunity to short afresh even after yesterday's fall?
Well, I think yesterday's fall was quite broad-based, as you just described, and clearly there is some new thinking among long holders here. I don't believe that the across-the-board selling that you saw or softness that you saw in the sector is something which has been generated by traders. Traders just join the ongoing trend, as it were, every single day, and they keep finding newer pastures. So there might have been a little bit of trading element, but I do believe that the decline that you saw, particularly in stocks like Eicher Motor, in stocks like Mahindra, in stocks like Tata Motors, I think these are all long exits. And when you start seeing long exits in certain big stock, it clearly indicates that the mood or the outlook for that particular sector and indeed that stock into the near future is not very attractive. Maybe the fact that at the recent Auto Expo, Maruti and Mahindra did not really reveal, major plans as this. I think Tata Motors therefore comes as a surprise, because they did, put up quite a big show at the Auto Expo, but that doesn't seem to have cut too much ice with the investing lot. And collectively, the sector has gone down, and I do believe new momentum has actually come into the picture here, and therefore shorting opportunities at the current level and on some a bit of a pullback from here or a bounce from here, that would still present us with a shorting opportunity. One should not be fishing for buys in auto stocks just now. Instead, one should be looking for some trading opportunities to sell here.
Okay, we were on the subject of autos and the weakness in ancillaries, and yesterday we spoke with two majors. It turned out to be a miserable day for both Motherson Sumi as well as Bharat Forge. They recorded poor third quarter numbers as demand clearly remains to wane, and they're showing no signs of picking up. In fact, let's hear out what both the managements had to tell us.
We are working very hard to ensure that the greenfields come out very, very strong. I think we are nearly there. Kashkamet is almost all broken even and doing better now. And the Tuscaloosa plant still has a little bit of this thing over there. But I think basically Q4 should be good, better than what we have shown up till now. But we are very pleased with what all the other companies, all the other divisions, all the other plants are doing. They have all working together to make sure that the results are better. So I'm sure Q4 is going to be hopefully better. But, with these challenges which are there in the world, including the coronavirus and all that, I do not know how much that impacts the global production of cars and all that. So, those particular things being as it is, we from our side are breathing with the market. We are working very hard to make sure that our performance is better and better.
The Indian market has been in a difficult situation. The demand side is extremely weak right now. And, we are a demand-led business. So as the demand picks up, I think we should see a strong recovery. We foresee the next quarter also as a weak quarter, as we had said last time. But I think starting FY21, we should start seeing recovery taking place. We are already beginning to see the end of the trough, and step by step demand will start going up.
I want to pick up oil prices once again, and the reason why I want to pick up oil prices once again is because oil prices are at a 13-month low. And typically when oil prices fall because of demand factors, then they don't pick up very immediately. You know, when demand disruption happens in a pocket, natural demand takes some time before it comes back. Demand loss is supposed to mean permanent loss. I mean, let's look at car sales. Car sales have gone down by 30-35% on an average for the last year. Now this year, it's not that we've seen a 30% comeback. At best, we will see a 10% comeback. So from a 30% drop, what do we have? A 10% comeback. That's how typically things move. Devang, nobody's talking about oil. Everybody is talking about coronavirus, but nobody is talking about how oil has got gutted and what it will do to India's BOP and how our macros will start looking better. I'm yet to pick up a narrative, a WhatsApp message, a Chinese whisper or intelligent conversation where market men have started using oil as a clear indicator of how things will improve for us.
Nikunj, in fact, a very valid point that you were making, that while the demand destruction happens, it takes a very long time to come back, and people just expect and hope that the demand comes back sooner than later. But as you rightly said, we have been actually talking about this being a tailwind, and because of the negative sentiment prevailing of coronavirus, and negativity always takes a toll on the positive set of news, we have been making this point, and that's quite obvious from the companies which have started to do very well. Your paint universe or your adhesives, just giving examples of stocks like Asian Paints or Berger Paints or Pidilite. I was making a point in my last question about how this is a big tailwind for companies using crude as their raw material. It's actually a very big macro positive as well, as the point you were making, that it has a good impact on the BOP position. Plus, one more point, relevant point, is that rupee dollar equation has also been relatively very constant or very strong in a way. That also has a strong impact with $460-65 billion of reserves. I think it makes us a little more stronger than other economies, and that's why I think the return of the foreign flows can be sooner than later.
Okay, lots of stocks on our radar today. We've got a repeat order of about 350 crores coming in for Capacite Infra, so that perhaps will see a move on open. Union Bank of India, the CEO saying they may recover 3,000 crores in the fourth quarter. That's the other one we're tracking for you today. MRF has commissioned phase 1 of its 4,500 crore Gujarat unit. We've also got Sheela Foam Q3 numbers out, EBITDA up 54%. That's a year-on-year figure at 94 crores. Meanwhile, Sundaram Finance Q3 earnings also in focus. Total income up 14% and PAT up 7%. So those are a couple of the numbers we'll be tracking. We brought you some of those other dhamaka earnings earlier on as well, like a Shilpa Medicare. So some of these stocks will also be on our radar as we head into trade today. In terms of strategies, let's get some more then. Mandar, what else will you be looking at today?
Looking at an interesting stock, ABFRL, Aditya Birla Fashion. For the last 7 years, the stock has been trading flat. So on the downside, 80-100 has been a support. On the higher side, 240-260 has been a resistance. The stock right now is trading near to its resistance, but is showing good kind of strength. So I have a buy in ABFRL, buy above 264, stop loss 250. And I think once it managed to break past this resistance at 260 levels, the stock should see a strong upside. So therefore, a target of 290 to 340 in the next 3 to 6 months.
CK, what else will be on your list today? I mean, you had a mix earlier. What are some of the other names that you'll be looking at?
Well, I would want to add Cadila Healthcare to that list as a buy candidate. I think this is a stock which has been, maintaining a pretty steady path upward. And it's not one of those prominent pharma stocks which get into action whenever the sector is in play. And most of the time, it's a very stock-specific thing whenever Cadila goes up or down. So correlation to the, the pharma index to the market seem maybe a little lower. So given that The last few sessions have seen Cadila move up consistently and pip past former swing highs to continue the higher tops and bottom sequence. I would believe that some specific news flows being played out here by those who are aware of it, and that seems or it looks like it might persist for some more time and hit price target around 290, 295 at the minimum. So this is a buy with about a 5-6 rupees as stop loss from your entry price.
Okay, Gaurav Ratnaparki joins us. He's going to give us one more technical idea. And Gaurav, what is there on your radar?
Yeah, from the mid-cap space, I have selected Federal Bank. In case of Federal Bank, the entire rise from the October low of 79 shows corrective structure, which means it was just a pullback and the stock can tumble back to the low of 79. So that's the downside potential this stock has from short-term perspective. And in fact, the stock has already started sliding down since last couple of sessions. The short-term momentum indicators are in line with the fall. So I'm expecting this stock to tumble back to 79 and stop loss can be placed at 94.
All right, let's go back to Devang as well. Devang, the other pocket that we've been looking at is, of course, metals. Crushing volatility. Tata Steel, of course, particularly on earnings, and we saw that impact on the stock yesterday as well. Where are you at with some of the metal names? There was that brief period when everyone was talking about getting back into names like a JSW, Tata Steel. What would you say now?
I think for a long time now, we have said that we sort of are trying and avoiding cyclicals, except for cement, where we feel there is a little bit of a structural story that is going to come for the next 2-3 years, but not as a very long 5-7 year play. But metals, as a general, as the sentiment prevails, we don't know what's going to happen to the global economies as such, and also because of the coronavirus or whatever scare, and also generally due to the principle that we carry in our portfolios that not to get into such cyclicals where you don't understand the trends very well and what happens to China as well. So we generally are avoiding it. Yes, of course, on the numbers of Tata Steel, though the numbers were not good, but there was fair bit of optimism as well from the analyst side, which I was just studying, that the $1 billion of debt to be cut, which probably will augur well over the next couple of months if things again stabilize across the globe. But yes, as a matter of fact, as I said, we generally don't get it or nibble into metals. There are many other spaces where probably good money is still to be made.
Okay, that's the word coming in on what the market texture is looking like. The SGX Nifty, by the way, is picking up some more weight. So after what looked like a quiet start with a positive bias, we're now holding up well in the green, a good 0.5% as we speak right now. But let's also tell you what's in the newspapers this morning and what's hot off the press in the Economic Times. ITC Chairman Sanjeev Puri has posted a gloomy outlook amidst the slowdown. Speaking with the Economic Times, he says that the economy is witnessing a slowdown across sectors and that a recovery would be difficult to predict. He also states that farm incomes have to grow in India, and that should happen, or rather that should sustain a sustainable growth trajectory. Also, the government has got serious with its electric vehicles push. It will be soon framing an efficiency parameter for batteries powering EVs as it invites companies to set up battery gigafactories. A high-level panel has been set up under the Bureau of Energy Efficiency to frame performance criteria and efficiency parameters for EV powertrains. And cotton and agro-commodities have become the latest victim of the coronavirus. Cotton and yarn prices have fallen almost 5% as the China market, which forms 25% of India's exports, slows down on the virus concerns.
Is growing its Indian workforce, it's hiring more, and in fact, we've got some of those numbers for you on your screen as well. They've hired over 20,000, they will be hiring over 20,000 students in India over the year. They've also hiked annual salaries by 18%. Remember, they also had a good set of numbers coming in, and it's great to see the fact that they're actually growing and expanding their workforce here in India at a time when a lot of the other, MNCs, particularly in tech, have been struggling with attrition, with upskilling, and of course, changing dynamics in terms of the industry as well. So a lot of good news coming in there from Cognizant. Okay, Siddharth Khemka also joining us this morning. Siddharth, let's get some input from you on really where the attention will be. We've almost at the end of earnings now, so in terms of earnings, we do have a couple of big ones lined up today. Coal India, Siemens, not necessarily market moving, but nonetheless, there will be an interest to see whether or not we're seeing any signs of a recovery, particularly, for example, with the Siemens. Some of these names, if you've had a look at them recently, what are you anticipating?
Yeah, very good morning. So last few days of result season, and especially for the heavyweights, Coal India production, Coal India would be coming out with the numbers today, not expected to be very good because the production was impacted due to heavy monsoon and flooding at some of its subsidiaries, plus lower offtake and reduced demand from the power sector, which led to some impact on the realization as front. Overall, if you see, we are expecting a downtick of about 10% in the net sales for the quarter, and about 26% fall in the net profits for the quarter at about 3,360 crores for Coal India. So again, we are seeing Coal India consistently getting impacted because of the lower offtake and the slower economic growth, which is leading to lower offtake from the power sector. And that is why we are seeing such a big monopoly kind of a business trading at such low valuations. Despite generating such high cash and good dividend yield, the stock is expected to remain under pressure in the near term until we see either the efforts of the company to increase the production as well as improving trends in terms of the power sector demand.
Coronavirus, now for the first time I'm actually reading something which could be attributed to a source to Deutsche Bank. Now Deutsche Bank estimate fee, according to Deutsche Bank, because of coronavirus, the China's GDP for the current quarter could see an impact of 1.5%. Now that's a very big number. Why? Because China is the second largest economy in the world, which already is struggling. And if it struggles further, and 1.5% cut in China and 4.5% growth for India, two of the powerful engines of the global economy, then we are definitely looking at a marked slowdown in 2020, because US is reaching what could be called as the peak, so the base effect would kick in. India is yet to pick up and is not going to go back to 6% in a hurry, which is us. And China, which had almost bottomed out because of coronavirus, now will see a sharp contraction. They also feel that in US, the GDP will remain unchanged. It could go down, however, by 0.1%. And for Eurozone, the impact could be 0.1%. Now, that's how Deutsche Bank believes in the short term, the lay of the land will change, at least because of coronavirus. Siddharth, I want to go back to understand the logic behind why somebody is buying DMart, Trent, and other retail stocks. Indian retail stocks currently are the most expensive retail stocks in the world. What justifies this underlying excitement, or I would say euphoria now?
Yeah, Nikun, so you rightly mentioned among the most valued stocks globally in the retail sector. And if you remember some years back, this sector, apart from the DMart which got listed, the sector was reeling under huge pressure of inventory, supply chain, debt, and the capex. So that is the time when they were all struggling. They have learned their lessons. They got impacted from the e-commerce discounts which were offered. So there are 2-3 things which has happened. Although we would still have a sell rating on DMart on back of valuations, the growth is something that I think market is liking. And as you were just discussing, that the growth in the macro level as well as in the micro level, not many companies are offering that kind of growth on a consistent quarter-on-quarter basis in excess of 20%. And some of these names, for example, you have a V-Mart, you have Trent, you have now now Aditya Birla Fashion Retail also joining the bandwagon, where they are consistently reporting higher growth. So this is not a typical market where you see value stocks doing well. Here we have consistently seen now for last 1 year, growth at any price is something that market is willing to do. It may correct at some point in time, but till the time the liquidity flows are there, I think that is what is supporting these kind of rich valuation, or you can say premium or expensive valuations for the sector.
All right. Siddharth, we were also talking about some of the auto names earlier and the fact that they were taking a bit of a nosedive yesterday, putting it mildly. M&M, for example, and also some of the auto ancillary names on the latest data coming out of SIAM as well. M&M in particular, also on earnings, down about 7% yesterday. Let's get a view from you because, even our chartists, there were a whole host of sell calls coming in on the auto majors yesterday.
Yeah, so if you see the entire auto pack, the results are not very encouraging, especially if you see we saw what we saw with the M&M numbers. The operating performance, although was in line, the revenue was down 1%, net realization was almost flattish. The key reason was that for the tractor segment, if you see the PBIT margins were slightly above, but overall numbers were lower than expectation, and PAT adjustment for the impairment was down sharply, 26% on a Y-on-Y basis. So overall the view is that things are not looking that good. We also had the SIAM data where this sector continues to struggle, reporting almost a decade low volume growth, where they are still reporting a decline on a Y-on-Y basis. On back of it, you have the transition from BS4 to BS6. India will be one of the few countries would be skipping the BS5 and would be directly leapfrogging towards BS6, and that is where a lot of cost rise will happen. There could be some disruption during that time. So next 2 months even doesn't look that good. We will have to wait and watch. M&M particularly, if you look at the tractor business, is dependent on the rural sector. We have seen rural economy not doing that well. There is not much of a push from the budget or from the government also expected towards the rural sector this year. So the overall rural spending from the budget is up just marginally 8%. So that again will not help the sector to that extent. Now the only hope is that inflation rising marginally, that will give farmers some pricing power, and expected monsoon, which if provides some comfort with being better, that can help the tractor companies towards the end of the or later half of the year.
Pre-open rates, and let's just revisit what the Nifty as well is up to, and more importantly on autos and metals, whether you see continued weakness from yesterday or not, because remember that's where the fresh short pile-up was sectorally in trade yesterday. Of course, the big buzzers with the likes of a UPL, MRF, which held out just very smartly, and NTPC, which also did its bid after its earnings did manage to impress the street. So NTPC, yes, is seeing a follow through. The currency is pretty flattish, just seeing a 6 paise move. 71.23 is where we're currently at for the rupee. On the ancillaries though, Siddharth, what's the view now? We were chatting with Motherson Sumi, Bharat Forge, both see a revival coming in, but pushed back. So it's not going to happen between before second half of the fiscal year.
Yeah, so both numbers came in yesterday. Motherson as well as Bharat Forge are disappointing numbers, below estimates. The commentaries from the management, as you highlighted, they were just speaking on your channel, also highlight to a near-term challenging environment, and they are expecting things to bottom out. Now, in this environment where both companies are global suppliers to the auto sector, plus the impact of coronavirus on the supply chain for the global auto companies. We have been now hearing some of the European car makers talking about the inventory not being enough to sustain production beyond Feb or March. And then we had yesterday JLR also talking about the impact that could happen on their production as well as on the sales in the China. So clearly there is a near-term challenge in terms of growth. There is a hope that things could improve going forward. Things are at the bottom, and that is the only hope that keeps these stocks in focus. If you talk about specifically Motherson, the good part was the new Greenfield plant is progressing well, and the losses are consistently coming down. That gives hope that things, if the macro improves, the overall numbers could improve going forward. Similarly, for if you talk about Bharat Forge, the expectation of a gradual recovery in the global economy, plus now that the Brexit has happened, the European and the Brexit thing, the overhang will get over, and that should lead to some kind of stabilization in the demand for these sectors. Unless that happens, both the stocks could remain under pressure in the near term.